Howdy, y'all. Welcome back to the miscellaneous channel where we talk about, you guessed it, all kinds of miscellaneous things. Today, we're going to talk about real estate investing and real estate investment trusts or REITs, particularly Fundrise. As you see here on the screen, I've got the homepage for fundrise.com loaded up. And as they say, it's a simple, low-cost real estate investment platform. And it's a really cool, as they say, easy way to start building a portfolio of real estate and start generating passive income, even beginning with just a few $100s. So I'm going to share my experiences with Fundrise. I've been using it about half a year now, over 6 months, and we'll go through how it works and each of the process and the portfolios and what you do with all those investments. So they say here, generally, they claim get about 8 to 12% in returns annually. And as I recommend, if you want to diversify your portfolio with real estate, this is a nice option, as is Vanguard has a nice ETF by the ticker label VNQ that also gives you some exposure to commercial real estate as well. They have some malls and shopping centers in the VNQ as well, like the Simon Property Group has a bunch of malls and different kinds of retail stores around the States. So what's cool about Fundrise is that you get as much of a percent of the properties based on how much you invest. As it says here, you got $1 million deals, but you don't need to write any $1 million checks. That Fundrise is really cool. They keep in touch with you really well, looking at each project that's in your portfolio, sending you regular updates and videos and texts. And they have properties all around the States, from houses and apartments and commercial areas. You see a couple examples here where you've got Texas, East Coast, Washington, D.C. area, and you've also got some in Florida. So generally, you got a lot of returns coming in since Fundrise started, year over year. You get a really good idea there. Their average annualized returns is there around 9% in 2018 and 12% back in 2014. So generally maintaining that between 8 and 12%. We'll see how 2020 holds up with the economy and the coronavirus and all that kind of stuff. That's a general overview of Fundrise. Let's get into some specific details. I'll share with you my experience and my story with Fundrise. So here we've got my account overview. Check out some more specific details on how Fundrise works. In my experience, you can see got a few $1,000s invested into Fundrise. They have a few different investment plans. I've chosen to go for the balanced investing. I'll talk more about that later. They also have the account level when you're kind of beginner, an introduction, a core, and then once you have over $10,000, they put you at a more advanced level, and you have access to different real estate funds based on what your account level is. You see, I started here in July 2019, so it's been over half a year, 6 months. Got over $100 already in returns. So interest rates I've been happy with so far. You see, I've regularly been investing more in my account. So I started with about $1,000 and then have gone up and thrown in some more splashes of income and different investments over the last few months. what's cool is they give you a really good idea of not only your dividends that you get from things like collecting rent, which says this is an awesome part, right, about real estate investing. You get monthly rent. What's awesome about Fundrise is that, hey, you don't have to go around cleaning toilets or fixing doors, fixing heaters, fixing air conditioners. They take care of all that for you. So the dividends, so you get them on a daily basis. They're actually distributed and reinvested on a quarterly basis. And then there's also appreciation of assets. So you've got the NAV you'll see that NAV all around the website. That's the net asset value. And that's the appreciation then is like the estimated return from changes in the NAV. And that's typically like the property prices going up. When you buy a place in, say New York City or LA or Houston, Texas, and you bought it 10 years ago, 20 years ago, especially if you bought it right after the housing crash, let's say around 2009, 2010, then you're getting some great appreciation. And it's very logical that the house value goes up over time as the land and property. So overall here is the dashboard. This is what you see when you log in. Got a summary overview of everything. So you get to choose whether you're investing in debt or equity. And see, I'm close to about half and half. And that's the balanced portfolio where you're investing in both. And what's really exciting is that I'm in 127 active projects. So I really prefer this because, if I was in one house and I'm invested in, say, Topeka, Kansas, or one specific city or town, and then something happens, like that one town, say everybody's working at one company or they have a big Amazon office there and then Amazon decides to leave, well, that really sucks if you've only got one project and one house there. So it's cool as you'll see that these projects that have over 100 are distributed all around the states, from the South, the East Coast, and the West Coast. And Fundrise is really good about sending you an email and then keeping you up to date with recent activity. So here you can see recently had an exit update where I was invested in part of the West Coast REIT. I got over 8%, and the investment paid back successfully. And it's cool to note too, though, a few months ago, they were having trouble collecting some of the funds from one of the properties, and they were very open and honest and transparent around that. I really appreciate that from Fundrise, and fortunately in that example, that was an LA property as well, I believe around Thousand Oaks. They were able to pay back the interest on the investment. So it was no close call. And as I said again, it's just I'm not worried about it because you're in over 100 projects. I mean, that's great. It's fine if one or two are going up and down, or as many. You know that the general long run, it's going to go up. People got to live somewhere. People are going to be paying rent. You might as well be collecting on that. Here's another update where they have some in the East Coast and the DC area where they've put some luxury condos. So these are all projects that are part of my portfolio. Another cool thing here is that they're offering a discount if anybody on Fundrise, any member actually wants to buy one of these condos, and they're offering a discount. Another really good example here is that you just got such a great geographical distribution. You've got a profitable exit from Albuquerque, New Mexico. And look at this one. 18% was the final return after they sold these apartments in Albuquerque, New Mexico. Another one here towards the East Coast, on my East Coast REIT in Charlotte, North Carolina. So really quickly, you see that you get just a great diversity. I wouldn't want to be traveling all over trying to look at these properties with my own eyes. I'd rather chill out and relax and travel around the world and be in Latin America or Europe and hanging out on a beach, spend time with the family if you've got kids. And it's nice to have that exposure to such different markets, from, as we've seen, these just most recent updates in February 2020 with North Carolina and DC and California. So we're constantly getting updates here. every few days they send nice pictures, send a map of it. They do a great job investing, in my opinion, in properties that are going to grow in the future, where it's really clear when new metro lines and public transport lines, they get announced years before they're built. And specifically, I lived in the LA area for a few years, and I've seen where the new metro lines are coming in, and they're buying properties, where the new metro stops and the new metro lines will be coming in within the next couple of years. So that's just a really, really smart investment, in my opinion. So that's the overview of Fundrise. They also have the performance, where you can show like year to date returns. And again, there's that NAV, again, the net asset value. So that's the value of real estate. Then that's kind of like they do it as a per share. So we'll dive into some of them, and you'll see that some of them are rated about $10 a share. Some of them are up to $12 a share, and they increase and decrease those. So you quickly see there, I've got a NAV percentage rate and how each of my different funds are doing that are in my portfolio. So you start seeing a few of the names that I'm invested in. You got an East Coast, a Heartland, which has places like Colorado and Texas, and the heartland of the states. The West Coast, you got Oregon and California, and specifically they have these income and growth REITs, where income is based on, as I said, having a monthly recurring revenue, or MMRR, where you'd say, hey, I'm collecting rent on these properties from the long term. Whereas the growth is a more of a long-term view, where they're buying a property and looking to sell it in a few years, and make as much profit as possible on that. So again, they're my value as it's gone up over time. Most of the big jumps, of course, are from me throwing in more cash into this investment, as I've gone to build more and more trust with Fundrise over time. I even communicated individually with members of their team with questions. They're always really quick to get back to me with any questions that I have. Again, here's the portfolio, where you see each of the different ones that I'm invested in. You see a nice breakdown of how much I have in them. So income 2, I've got $1,000 there, and the growth, I've got $1,000 in that one. West Coast there, I've got quite a bit more, $600. Then the East Coast, $400. This Heartland one was really cool and exciting. I'd only got $200 in there before they stopped letting new investors, put in more money into that one. So obviously that was a really hot one. I'm going to take a look at that in a minute. That's got Denver and a bunch of other areas that obviously a lot of people think is going to grow very well in the future. So for now, I can't even put more money in that one, although I'd love to. Just have to wait for my interest and dividends and all of that to automatically reinvest in that fund. And then what's cool too is just recently, this last week, they started offering me what they're calling the Fundrise IPO, little IPO. And so there's kind of like a public offering of shares of the company. And since I've been working with it for a few months now, and the staff there has been very good communicating with me, wanted to invest in the actual company as well, since I see it growing in the long run. It's a really great idea. I've looked at the other places like Rich Uncles and some of the others that are out there, and really Fundrise really has their stuff together. And giving them a vote of confidence, I invested $1,000 in their IPO shares. And so this is the number of shares you have in the company as it's been growing over time. And again, this is a long-term investment, as everything on their website is. It's really easy to turn on a spigot, and start collecting the monthly or quarterly income coming in from, say, rent and all of that. And that's what I'm really in. I'm in it for the long-term game, playing the long game, and having that auto invest. And if I ever need to, then I can start withdrawing funds, or start just by taking the profits each quarter rather than going and dipping into the capital, because I don't plan on ever selling this. I'm only just living off the interest. And that's, again, part of the FIRE movement, or financial independence, retire early. specifically as I like living and spending a lot of time in other countries throughout Latin America and Spain and Europe. Since I speak Spanish fluently, provides me a good opportunity to do that, and the cost of living per month is significantly lower. I like to go to the States and visit my family regularly. However, I do spend significant amount of time each year outside the States, and in these other countries it's really great where you about $1,000 a month, if that's your income, you can live like a king and have a great time. And that's not that much income to be able to have as your goal from this, and whether it's index funds and cryptocurrency, staking, or real estate investment, all those kinds of things combined. Anyway, that's about the IPO. As I said, is another long-term investment. So you see I've got 113 shares right now. They offered the shares at about $8 a pop. So I bought about $1,000. So I have 113 shares. These will go up over time. And if they ever do an actual IPO, big IPO on the stock market, whether it's NASDAQ or Dow Jones, then so you'd be able to sell those, and I'm sure it'd be significantly more than $8 a share as they keep adding more and more properties each month. So here's the list of those 127 active projects. Nice breakdown. So you've got from Maryland, Las Vegas, Nevada, Long Beach, California, Texas, East Coast, West Coast. This one looks like Chinatown, part of LA. Florida. So I've got 11 pages worth, and you can kind of flip through here. Dallas, Texas, South Carolina, Union City, I believe it's in the Bay Area, Washington. So it's nice to be exposed to all those different markets, because as we know, those markets can go up and down. Places like Houston, Texas can be kind of boom and bust based on the energy industry. And so it's nice to be exposed to that. You don't want to have all your eggs in one basket, right, as they say. So it's nice to have that variety. Jump into some of those specifically. First, we'll go through one of the different positions that we have in the portfolio. And so specifically, it's the same area of the income and the growth, and then they have a few that are by region. So for example, this Heartland REIT, if I click that, then I get all the details on that. You see about 2.5% of my portfolio. Got a couple $100 in it. Getting dividends in there. They get paid at the end of the quarter. And then here, as I said, is that NAV again. So this one's about $10 a share. See if we see another one that's got a different price. That's the net asset value per share. So that's how all this stuff is based off. All right. So I've got 21.5 shares. So I've got $215 in there, because 21.5 times 10. If you're good and quick on the math, you move the decimal place over 1. So I had about $215. But if all these properties increase in value and the NAV goes up to $11, then very quickly, right, you start increasing how much this position is worth. And they do charge about 1% for advisory fees, and you can see that's very low. It's like 4 cents, 4 pennies on this one, where I've gotten over $1. Again, I'm so happy to pay that, because I'd rather pay that than be traveling to all these properties, fixing toilets and asking for rent, and fixing doors and all sorts of stuff that go on when you have to actually manage the renters. So again, the dividends there. So these are ones I got last quarter that have been paid, some unpaid ones at the end of the quarter. When that happens, the properties haven't gone up in any value, but $10 is generally their starting NAV value. So that's pretty easy to go up. We'll see some of the other ones that have been around longer, the other projects and parts of the portfolio, they're up to $11 and higher. So in this Heartland, we've got 17 active projects. So you see we've got Texas, MS is that Missouri. Apologies for my lack of geography knowledge there. Again, you've got a lot of the different states. We've got 50 states in the U.S. and they all behave a little bit differently. And then this is cool too. We got Whole Foods here, Chicago, Illinois. So this is a nice one that's not on, it's focused on either coast. It's what they're calling the Heartland. And so you've got things like in Denver, Colorado, which feel is a really really nice growing investment area. With the cannabis industry, they were the first to legalize that, and so they've just had huge population growth there and had a big housing shortage there. A lot of my best friends from college are there, and just talked about the last 3 to 5 years has just been insane there. If I click on any of them, then you see you get all the details there, which is really cool. So you get the Asbury Plaza apartments. So you put this in Google Maps and see these are the actual apartments that I own a little bit of, which is really cool and exciting. And so you see Fundrise put in 5 million. This one's in equity, and they tell you their projection about 10 to 13% there for the return on that. So if I click on there, I can see the apartments more. They have a rating for each place that they do, and they say like how much they think it's going to get the return and whether it's a risky investment or not. So they do a nice variety of that. As I said here, Denver has an economy that's growing a lot faster than its housing supply. So there's a lot of opportunities for smart investors. Here's the breakdown. So you've got some senior debt, so senior housing and stuff from Fannie Mae. You got 68%. There's other people, Orion Real Estate Partners, put in about 500 grand. And then Fundrise has about 5 million in. So you get this huge project that you're a part of. And then you are in this part here with Fundrise, and they put in a significant part, almost a third. They've got a nice breakdown for each project. Remember, over 100 projects, and they're here saying, hey, we got this in 2017, and then they post different milestones as different things happen. So that's the Heartland REIT, which is really cool. And if you actually go, you can see all the different Fundrise offerings that they have. When you go to fundrise.com/offerings, then you can see a nice breakdown of each of the different ones that they have. So the starter account, you can start with a minimum of $500. You don't have, like I said, a direct investment in those. So since I have over 1,000 in there, you get the core account level. And so you have the different income, Heartland, West Coast. So these are all the ones that I'm in now. And then if at the bottom here, we'll see where there's an advanced account if you have 10,000 in there. And so these have 3 different funds where you can invest in a specific city, and you can see the different details on that. So this one's heavy on the Washington D.C. area, which as long as it's the main head of the U.S. government, well, it's going to be continuing to grow, and housing will be valuable there. So this one has 25 active projects. You also see they got Amazon in the background, since Amazon has announced their HQ2, as they're saying, to be there in Northern Virginia, which is just billions invested in the new location and over 25,000 jobs. So I think that's a really smart idea, right? Getting in there in the Washington, D.C. area. Luckily, Fundrise team is out there, boots on the ground, looking at these places, and I don't have to go out there and deal with the traffic or traveling around to see what's available and what's a good deal. So these are all the properties that they have so far in that fund. So that's my portfolio. You can see there, performance I'm happy with. I've got significant parts in the income and growth. So I'm going to split around there. You can see my 2 biggest are income and growth. So growth is more long-term. Income is about getting that monthly recurring revenue. So these are going to be mostly in the income, are going to be a lot of apartments, buildings, where you get parts of those checks each month as people are paying rent in those different apartments. And then when you look at the growth one, those are more the long-term investments. So I'm in the growth 3. So they have a bunch of different growth and income ones, or they split them up so one part of your portfolio doesn't get too bloated, and you can kind of come in and specifically see the breakdown of these projects. So this is a growth, and you see that there's got 5 in it right now. So it's kind of a newer one that they're adding to. It's got mostly properties in Texas and in California, and they've got whole apartments in there as well. You remember that at the beginning we saw a new apartment renovation that they did, paid back, what was it, over 12% on the return. So I trust them. These apartment renovations are a great idea to jump in and get really great profitability and returns for you. We go to the East Coast, REIT. It's going to have stuff in DC area. Of course, you can also see here this example are saying the current NAV, net asset value. So certainly this price started at $10 like you saw a lot of the other ones, but then the value of the properties has increased, and now this is $11 a share. So if you got in and bought some whenever it was $10 per share, then once they up it to $11 a share, then that ups your actual income and your estimated value by a lot, and like 10%, right, instantly. And that's all on top of the regular dividends and payments you get from monthly rent. So that's here you got these dividends I got last quarter, a lot more coming in next quarter, and I've luckily been able to take part of that appreciation. You see, as the shares that I've bought have increased in value. So these properties here, well, you've got South Carolina, Florida, all these different combination apartments, New Jersey. So I really like to see just a different value and a different variety of states. You know, I want to see everything in California. Like, California is great and very likely to continue growing. You got lots of great companies there, from Tesla and SpaceX and Google and Facebook and Twitter and all that fun stuff. It's also great to diversify that and see all these different values. So you see this, they've got 30 million in. Wow, that's amazing. And on this one, the Olympus Harbor Island apartments in Tampa, Florida. And so they've got 30 million in on that one. And so that's a huge investment. And then so they invested even in different parts. And so I'm part of these two different parts of the capital stack. And so we're in at, you know, over half of the value there. And so these just have a ton of apartments. People want to go live on the beach and luxury apartments. You see they've just got tons and tons of units there. And then, you know, you just sit back and collect the rent. And whether you're on a beach in Mexico or Argentina or Chile or Spain or in Asia, wherever you are, right, you're getting monthly profits from there. That's the general overview of Fundrise. You enjoyed it? Please leave a comment down below. Let me know what you thought. Be sure to subscribe to our miscellaneous channel if you haven't already done that. And if you're using Fundrise, let me know what you think. What's your experience been with it? In the end here, I'm happy with it. And as you can see, I continue to investing more into it. I said they've just launched a new Android app too, which is awesome. Excited to use that since I'm mostly an Android guy. I use Apple computers. I prefer Android on the phones. So yeah, let me know. Subscribe if you haven't already. Click the like. Give me a thumbs up on there. It really helps your YouTube algorithm. And keep in touch. Let me know what's your investment. What are you doing for monthly recurring revenue? What are you doing for your passive income? And what stuff are you invested in? Thanks for watching, and have yourself a wonderful day. See you in the next video.